Why markets are rising despite COVID surge and what you should do. Market participants seems to be taking solace from the government decision not to go for full-scale lockdown, the impending extension of vaccination to all adults and hopes of things normalizing in couple of months. As if in disregard for rising COVID-19 numbers, new cases touched 3.75 lakh on Wednesday. Sensex has gained 1,887 points or 3.9% over the last 4 trading sessions. To close at 49,765 on Thursday, market participants seems to be taking solace from the government decision not to go for a full-scale lockdown, the impending extension of vaccination to all adults and hopes of things normalizing in a couple of months. Is the stock market detached from ground reality? At a time, everyone is focused on protecting themselves from the coronavirus, with even corporates are diverting their industrial resource towards the manufacture of oxygen. The rally in the markets has taken many by surprise. I think currently there is a huge gap between the ground reality and market, and I have a feeling that the ground reality will soon catch up. I also feel foreign portfolio investment outflow, which started in April, will gather pace in the coming days and weeks if the healthcare situation does not come under control, said the founder and CEO of a leading financial services firm. Economists say that while the market is positively linked to economic growth in long periods of 10 to 20 years, the same cannot be said for the short term. While the market is always forward-looking in the short term, it is driven by daily news flow and the news around vaccination of 18 and above, shortage of vaccines, rise or fall in daily cases, etc. are currently driving market movement. Given the fact that in the next 3 to 4 years the economy is expected to go back to 7 to 8% GDP growth rate, one can only guess the levels at which the Sensex would trade at in 3 to 4 years, said Madan Sabnavis, chief economist at Care Ratings. He added, however, that over the last 1 year, there has been no linkage between the economy and the market movement. So why is the market rising? A good earnings season, Q4 2021 results has come as a big positive for the markets. Also, many feel that the markets are looking at a bright scenario 2 months ahead as they always trade over the future outlook. If the absence of a nationwide lockdown and the limited impact of coronavirus. In the absence of a nationwide lockdown and the limited impact of lockdowns announced by the states have reduced anxiety, there is optimism surrounding the vaccination program. Also, banks, which are considered a proxy for the economy, did not face asset quality crisis as had been expected. The market's big hope is on the vaccination drive. While infection and mortality is low among people who have been vaccinated, the market is optimistic that in 2 months' time, when India would have vaccinated around 35 to 40 crore people, it will result in free travel and near opening up of the economy. There is a sense that it is a pain of 1-2 months and normalization will be faster. The hope is that the second quarter would be better and the festive season will be quite strong, said Pankaj Pandey, head of research at ICICIdirect.com. About the government's decision to open vaccination for people above 18, a fund manager who did not wish to be named said, since the majority of the workers in factories are at the age group of 40 to 45, quick vaccination would ensure proper functioning of factories and better economic activity across the country. Even a senior official with CII said, we were pushing for vaccination of all above the age of 18 with the government, as most workers employed in factories fall in the ages of 20 to 40. Their vaccination will be an additional security for industries to continue operations and avoid full-scale lockdown. Also, the fact that most countries with resources are coming to India's help has boosted sentiment. Over the last few days, while the US removed restrictions on export of vaccine raw materials, countries are helping India with oxygen concentrators, ventilators, vaccines and other materials. So who is buying in the market? If global liquidity and inflow of funds foreign portfolio investors led to the domestic market rally that began in October 2020, the current strength in the market is being provided by domestic institutional investors, mutual funds and insurance companies among others. In April, DIIs have invested a net of rupees 9,669 crore as against a net outflow of rupees 11,101 crore by FPIs. Market data shows that the first time in 7 months, DIIs have overtaken FPIs in net investment in Indian equities. In contrast to the period October 2020 March 2021, while FPIs had pumped in a net of rupees 1.97 lakh crore that lifted the Sensex by over 31% from levels of 38,000 to 50,000 in March. DIIs were busy selling in the 5 months period between October and February. DIIs pulled out a net of rupees 1.3 lakh crore from domestic equities. So while FPIs have been concerned over the rise in COVID cases around the world and are exercising caution, market participants say domestic investments have been strong on a variety of factors and on hopes that the impact on the economy will not be as hard as last year. Can there be a correction, and what should you do? While FPIs have been selling from the Indian markets, there are some who feel that may increase the pace of the sell-off if the healthcare situation does not come under control soon. If there is a sharp outflow of FPI, there could be a correction in the market. So it is possibility. However, if things start improving in a week or two, markets may gain confidence and renewed strength. Experts say investors should not look to speculate in the market at this time. While existing investments should continue, fresh investments for the long term can be made. Stock investments should, however, be high quality companies that are better equipped to handle the current crisis and are expected to increase the market share in the current environment. As for profit booking, for those who are in need of funds and want to keep higher liquidity with themselves, since the markets are back at high levels, they could consider some profit booking. Those who don't need the money for the next 1 or 2 years can stay with their existing investments. Thank you.